The end goal for my personal portfolio is to one day to be able to live off of dividend income. And in order to be able to do that, I need the holdings in my portfolio to be absolute free cash flow machines. And the most recent addition I made to my portfolio was Louis Vuitton, stock ticker LVMHF. And this is the exact type of company that I believe is a free cash flow machine. And in this video, I'm going to show you what I mean. Let's go ahead and step back for a moment and look at this position in my portfolio. And like I said, it was my most recent new addition. You can see it over here. I'm currently up around 30.04% on this position. I'll go ahead and show you when I added it. I added it in around January of 2024 before they released fiscal year's earnings report. And we can see they absolutely smashed this report. Revenue was up over 8.8% year over year, and net profit was up over 8% as well. Now let's go ahead and talk about this company from a free cash flow and dividend perspective. We can see if we jump over to our dividend breakdown tab, we come over here and plug in LVMHF and hit enter. We can see all this data is going to automatically load in. And like always, if you'd like to be able to download any of my spreadsheets and be able to pull in stock data straight into your spreadsheet via the Ticker Data add-on, then you can head over to tickerdata.com and download my spreadsheets and download the Ticker Data add-on. Let's go ahead and keep going with our deep dive. We can see Louis Vuitton over the past decade has been a dividend growth machine and a free cash flow growth machine. Look at the 10-year dividend CAGR sitting at 14.51% and the 5-year dividend CAGR sitting at 15.3%. So imagine inflation sitting at around 3%. Louis Vuitton's dividend growth rates have absolutely destroyed the inflation rates, meaning with their dividends, you're getting more and more purchasing power every single year. Now, if a company is increasing their dividend payouts over time, but not increasing their free cash flow over time, that's a scary thing because the free cash flow payout ratio starts to climb higher and higher. And keep in mind, there are 5 things that a company can do with free cash flow. They can reinvest back into the business, they can pay down debt, they can buy back shares, they can pay out dividends, or attempt mergers and acquisitions. And if a company is using all of their free cash flow to pay out dividends, then that leaves little capital left over to reinvest back into the business so that the business can grow. So obviously, we want to look for healthy free cash flow payout ratios. And if we look at Louis Vuitton, we can see their 10-year free cash flow CAGR sitting at 14.31% and their 5-year free cash flow CAGR sitting at 18.15%. So this phenomenal dividend growth we've seen over the past decade is backed by their free cash flow growth. And one of my absolute favorite charts on this dashboard here is our free cash flow earned versus the dividends paid out chart. We can see the blue is the free cash flow and the red is the amount paid out in dividends. And it's clear that the free cash flow has been growing at an extremely high rate over the past decade. It's dropped down a little bit lower over the last couple of years, but it's still way higher than it was in 2013. We can see in 2013, they generated around $2.7 billion in free cash flow, and in 2023, over $10.5 billion. But here's something else I absolutely love about this company. When you look at a company like Louis Vuitton, what separates them from other companies in their industry? Just look at the profitability of this company. Gross profit margin for trailing 12 months of 68.8%. Louis Vuitton is able to achieve luxury gross profit margins because they offer luxury goods. And in my opinion, this gives them a huge advantage over their peers. So when I'm looking for companies that I believe can be dividend growth machines to add to my portfolio, Louis Vuitton is the exact type of company that I'm looking for. Now, do keep in mind, this company pays out dividends semi-annually, and it doesn't pay out the same amount every single time, but it's clear those dividends are growing year over year. But that is something to take note of. Now, like always, if you'd like to get access to any of my spreadsheets and the Ticker Data add-on within Google Sheets, then you can head over to tickerdata.com and become a member. But with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.